All right, let's start the session. You're about 40 people in, so we can go ahead and start it. How's everybody doing? Let me know in the chat. And I recommend everybody to stay um, active in the chat because it's good. Awesome. So let's start this session. First of all, don't forget we have Forexia Academy. We're killing it up there. So if you're not part of it, you're truly missing out. If you're watching the YouTube, then the links would be in, down below somewhere. All right. So we asked everybody what topic you guys wants to have for this session. We passed 800 members, so this is another webinar. And 36% asked me to use EMAs in line with market structure. But however, I just want to let everybody know that the least percentage was for trading plan and risk management, which in my idea, this was the most important topic between out of these four. And I was expecting this trading plan and risk management be the one, because we talk about all of these three already in our YouTube channel, and you can literally learn all of it. But we never talked about trading plan or risk management. So I just want you to know that you can have a bad strategy, but win and be profitable using a good trading plan and risk management. It doesn't take a holy grail or perfect strategy. It looks like you all looking a lot at strategy, where trading plan is the most important one. Okay. And also risk management, how everybody manage their risk. It's depend on their accounts, their trading behavior, and all kind of stuff. But we respect your choice, and we're going to talk about how to use EMAs in line with market structure. Okay. If ever you went to the indicators part, you know that moving averages, or in our case, the way we use it, it's exponential moving average, is type of indicator that it's under trend. If you go into the indicators, you have to look for EMA on the sections that is like trendings or trend, depending on your platform and broker. So it's basically you trying to catch, using EMAs to whether enter or identify the market direction using an indicator that basically indicates when market is in trending, with, it's basically turns to dynamic support and resistance, and that's where market is on trend basically, or in momentum. So in order to work at the best with EMAs, you need to understand how trends being created and what is the characteristic of a trend. In retail world, they make us believe that market is in trend when there is a low and high, and then higher low, higher high, and higher low, higher high. I put this wrong. Let me fix it quickly. And in the downtrend, they look for a high and low and lower high, lower low, and go on. How many of you out of these 50 people in the chat, in the call, how many of you paid to someone to tell you that a trend is being created by higher highs and higher lows? Yeah, I see it in the chat, and yeah, getting more and more. So that's what retail trader believe. Okay, you whether learn it from YouTube or you learn through paying the courses that they told you they're gonna make you reach super quick, because they know higher high and higher low, higher high and higher low. And it sounds cool, I know. And when you talk about it, people don't understand. And they're like, wow, you're smart, you can understand this thing, and you can't even say it. I can't even say it, how you can understand it, and you look cool and all that kind of stuff, right? But the real way that market works is basically a move. The major move, what I would like to call it, is the major move and then induction, which is what I refer when I say induction is two different words at the same time: stop hunt and induction. So every time I say they're making an induction trend, basically they're stop hunting people who jumped in that major move. Okay. And at the same time, trapping new people, new traders to commit to the wrong direction, trade to the wrong direction. Okay. So trend, major move, induction, major move, induction. And then we have that phase that what we call it at the previous webinars on YouTube, is that the process of peak being formed, which is trapping both buyers and sellers and then stop hunt. The buyers, for example, in this case, they want to reverse and sell the market. So they induce buyers, stop hunt people who's in any way selling it, and then make the major move. And the moment major move is done, they start to stop hunting and inducing more people to another direction. So, and then major move. The trends are not higher highs and higher lows. It's a structure behind it where there is a pump and dump. It can be during a week. It can be, in middle of the week using midweek reversal. And in the case that I draw it myself here, you can see that a major move happened, then induction, price made the major move, stop here, gap opened, and then stop on everybody, fill the gap, and then move back to the upside with a major move. So I don't care how many higher highs or higher low is created. I will look for my trap and more setups. So now we want to add EMAs on these charts and how this EMA is going to behave. So we usually have 3 EMA on our chart. What I explained right now so far in this YouTube channel was 14, 50, and 200. I'm going to stick with it. However, we do have a DMA course, which is here. We do have a DMA hack course, which is the most powerful method of using moving averages. It's a full course with a lot of videos on it that we go in depth. And you can message me if you want to learn more about it. But since that's a premium education, I'm gonna stick to 14, 50, 200, which is all retail trader use. So don't think that this 14, 50, 200 average is what we use. We use DMA and it's damn accurate, okay? So if sometimes you get false signal in 14, 50, 200, that's what it is, because a lot of retail trader also are in the same page with you. One of the benefits of our way of trading is we always are against retail trader, but with using 14, 50, 200, sometimes you might get trapped where retail trader also are in the same direction as you, and that never would work, okay? So we understand how this trend will going to work. So with 1450 200, there is two of these averages that are fast basically, and one of them is slow. We want to expect these 200 or our a slower average. It can be 800, you can put 500, something that is not fast average, okay? And we want to expect this 200 end up, comes in line with induction, okay? So we want to catch a trend, 1450, imagine this is 14, and then we got a 50, which is here, and then in time of induction, let me just complete the drawing. So in time of induction, price will stop or somehow even break and come back and respect that 200 or slower average, okay? So I'm not gonna draw this and show you. We're just gonna go to the charts and talk about it, okay? And this is let me just add the EMAs. Okay, so in this case, the yellow one is 14, the purple is 50, and the white is 200. Okay. This is our prediction, by the way. We had it in we sent this in GPG VIP. We predicted it all the way from end of Monday. This is one of the reasons we don't trade Monday, because it's just the start of showing how that trap going to form. We predicted the wedge formation breakout below this zone and hit the level. And actually, we gave an exact price of 109,950. And then this is what exactly happened. Price break out of wedge to this zone, trapped everybody, and that area of 109,950 with 10 pip stop loss, 5 pip drawdown, and currently up 60 pip. But I'm not gonna talk about this right now because we can't. I can predict the next move. We already did. You can see we even have our take profits up there. But I'm gonna go about examples that is already formed. So this is pretty close to what we just saw. That a trend is changing. Okay, a high was formed, high of previous week. Monday price came to that up. This is, you can see this little highlight, lighter gray is London session. So this is right start of London. Okay, this green candle. And when it's getting darker, it's when New York session opens. Okay, so right at session changeover, when London session is open, you know how spread can go crazy. All orders up around here was activated from people who wanted to continue this trend, follow this trend. And then price give you, candles talking, engulfing candle closed below average, and then respect failed to break and came below both average. Now you don't have a cross yet, but having this analysis before, like if you had this wedge formation in Friday, drawn out in Friday or Thursday, and you were waiting for the price to come up around here, then damn right you can take this no matter what these averages, not crossed yet. The fact that they are below averages and failing to break is a confirmation for you. And this one also respecting 14 and give you engulfing candle right at New York session open. That's a sell for you right there that you can start. This is how that's the first way with 20 pips stop loss. That's the first way of using moving averages in line with the structure. that you wait for the candles, wait for the structure to happen, and then wait for the candle confirmation where they are failing to break averages. So they're below averages. All averages looks upside, but now they broke to downside of this and respecting it. If you're not sure from here, come back couple of hours, you can sell this or after engulfing. Let's say you didn't trade it. In Monday, now this is that induction we were talking about, okay? Well, this is not a pretty great induction trend, but this is exactly the points of using EMAs in line with the structure, that you can see that, all right, price consolidating below this average. We talk about daily structure a lot, that you want to wait for the stop hunt to the upside and then drop. So stop hunt would happen. Notice I'm not in um 15 minutes time frame. We can go there. This is November 5. It's right here. Okay, so you see consolidation, stop on the low, and then came to the upside. At the time of London, you can see these wicks, and then engulfing candle break below. During the London, you can just watch this happening, that came below averages, and 200 wasn't even touched, but price failed to go even higher. So then came below averages, start respecting it, and all these buy candles is a sell opportunity for you with 10 pip stop loss. And risk to reward is pretty crazy on this. Even this one, it's 56 pip. And if you take even better one like this or even this, with 10 pips stop loss, it's 1 to 6 risk to reward. Something that if you talk about it in baby pips or other YouTube channels, they think you're crazy or scammer. And I understand, because it's not out there. We have it though. Okay. And then same thing, price comes back, consolidation, daily structure, break to the upside, M formation came below averages. You see, now I'm giving you an opportunity. So many times you might saw an M formation and it played out like this and hit your stop loss. But now I'm giving you an opportunity to wait and see that M formation happening, and don't freak out if you're missing that tippy top entry, because you don't want to use a lot of stop loss. But now I'm showing you a way that you can literally enter here with 10 pips stop loss. You see, it goes even above the high. And then you can get 27 pip by the next day. And if you hold it, still your 10 pip stop loss. You see, that's 10 pip. Still your 10 pip would be safe unless your broker is so bad. And then you can get even more, 45 or 53. But now, what you should understand from this is, when I say inductions, that induction, you have to wait and get a confirmation that that induction is almost done by using these averages. That's one of the easy way to use EMAs in line with the structure. That the structure is playing out. So if you want to take a reversal, we get there. But this is in creation of trend. How you can back pips by waiting consolidation, stop hunt to 200 average right now. You see, respected the 200. Obviously, I'm not asking you to enter there right at the first touch, but 10 pip or a little more, 12, 15 pip could have saved you. However, we rather wait for the stop hunt first, and then price to see kind of, if I draw, I don't really believe in these patterns, but you can see this. Well, not really good one. Let's put it like this. This is small head and shoulder at this average and respecting 200, and then came below respecting 14, and continue dropping. Next day, consolidation, price fails. You see, price failed to break it, so you can buy a sell candle to this trend. Instead of trying to catch all the time, trying to catch a reversal, if you're not good at it, it's all good. You can try another plan, and this is another one. All right. Just let me unmute Elvin too. 1 second. Oh no, I think I mute the wrong person.
Yo, can you hear me?
Yes, brother.
Yeah. I was just gonna say that's like a perfect example where we see the induction, and you get a DMA cross, which can be a false signal, and basically it's the safety trait that we learned. And you see a couple things to note, where you kind of put like, oh, people will call it a head and shoulders pattern or whatever, and we don't get caught up in that, but it is still basically daily structure where we accumulate it, we broke high, and then we continued along the way. And if you were to use DMA on a different, maybe like on an hour, you'll most likely, I would think you'll see a wick where the WMA, it was tested, but the candle pulled right back. So,
Right.
it never actually was violated. It was just manipulated. And just to say that is the power of DMA.
That's
And
actually true what you just said. You can see in 1 hour, it broke through, and then engulfing candle closed right below that average in 1 hour. You see, but this is a kind of different. We don't use averages like this to change different time frame, because right now it messes up. This is 50, and that's 200. We don't use it, and that's DMA, but you can still use the same it works.
yeah, and that's just understanding how the market move. And
Right.
then you can have security in your move, and then the EMAs are just going to help you as a tool to see how price is manipulating along its average.
Exactly. So if you see the continue of the trend, you can see you have options to trade in Fridays too, and then Monday create that high and low going to the wedge formation. As I said, we predicted it pretty good all back from here, and then price now breakdown. Look at how average worked. First of all, this now you see the wedge formation formed at 200 average, and then came again at 200 average, came back, respected it, engulfing candle below 14. So these are the moments that you can even, the breakout, you already predicted it. So you can just look for an entry opportunity to get in and eat that pip right there. That's to the same day is 30 pip, and it's not bad. 10 pips a day leaves a job away. So, and now we're going to talk about how that reversal works. I'm going to delete this so you can see it a little more clear. I'm gonna move this guy around. So price break below this zone, consolidated, and you can see still those madness of retest for retail trader is kind of a respect to 200 average. And then again, they ends in consolidation. Next day, they come back again at 200. So this area from here to here is where the structure, your knowledge of a structure should help you to stop taking 200 retest, 1450 retest. There is a time like this that you got that trap, and now you're seeing that perfect momentum on the way, so you use every chance that you got. Well, when you see that, okay, trend is so obvious, let me see if they go to trap people, that's identifying a choppy market and staying out of it. So you just want to wait for that clear shift where all these averages cross back together, cross back up. So 1450 crossed here, 14200, 5200. So now you predicted a signature trade that's going to reverse the market, and now average are in line with you. We just said, start of the webinar, that we will see stop hunt after even that shift, okay? And right now, same thing we expect here. The price shifts, and now you expect stop hunt. What happens right here is that they first trap people who are right. That market is going to, going to continue, and then stop them out, form that daily structure. Now you see that's the W that is literally valuable. W formation, first leg, second leg. You could buy a sell candle on second leg, and even 15 years experienced traders couldn't snipe like this for you. So that's 10 pip from here and 40 pip. That's actually literally the trade I took. And if you are in GPG community, you can go to shared media and watch my entry right here after engulfing, and boom.
And just to add on that, if you even missed that, what we always say, wait for the shift. There was another shift on the micro from London into New York. And then there was some accumulation. So you could get in there for the continuation, because think, why in the world would they go back down at this point? It makes no sense.
Yep. So this is how you use moving averages in line with the structure. You wait for characteristics of trend to show themselves up, and then wait for the price action in line with averages to give you a right price to enter and commit to the market. You realize I did not choose my direction based on moving averages. And if you think you get the EMA, you can check the direction by it, you are wrong. Still, structure is first. The yellow line is 14, the purple is 50, the white is 200. Someone asked in the chat. So now I have a question for you guys, and I advise everybody to actually engage. So in this is another prediction we had, and we sent it to VIP as well, and we're going to look at it. And I want to know, and this is actually how it played out perfectly. 80 pip drop on AUD. And so this is my question right here, and I want to see, I'm going to see who can answer, who actually spent time in YouTube channel and learned. Why, in a case like this, when reversal is happening, but you don't see that trend of induction and a stop hunt, why there is no induction? Who can answer that? VIP students are not allowed to answer, by the way. Trapping support, they have enough liquidity, chopping both sides. What we call it? What do we call when price is not forming a trend in induction? No liquidity. No. It's come on, guys. It's part of GPG. No. You all kind of got it, but it's easy to just throw in trap of support resistant or whatever. But what do we call it? As all these YouTube videos that we shared, if you study it, you know what kind of setup is right here. If you give me the setup name, okay, now that nobody's giving me the answer, I'm gonna put a price for it. There is a price. answer. What is the name of this setup? Let's see. That's actually sad. Safety trade, no. Lower loads, no. Well, it is a safety trade, you're right, but not the way we want it. Let me give you a hint. There is a book with the name of this setup. It's on Amazon too. Double bottom, come on. All right, David, the first one. David Estidi, what the money do? All right, please send me a message right now to Telegram, David. Let me just screenshot your name too. Okay, I'm gonna give you Golden Eyes course for free. So that's a $400 course. Mastering market manipulation. You got yourself a free course. Good job and well done. So this course actually has a lot of videos on it, so many great things on it. So congratulations, just send me a message on Telegram and I'll set you up. Awesome, guys. I hope you understand something and you learn something new. If you have any question, hit us up at WinGPG community or Elvin t.me/Elvin Coleman and t.me/GPG Forexia. So yeah, that's pretty much it. Elvin, if you have anything to add, we got 3 minutes time.
Nope. Just to add, don't get too caught up in the EMAs, because when you see people take trades with them, when you kind of look at them at a glance with back testing, you're like, oh, holy shit. Like all I have to do is just enter when this cross. But it's once you really get into the nitty gritty, you realize that it's not that simple. And what you need to do is use the EMAs properly. Like in the most proper way to use them is going to be in the correct market conditions. So what Human been trying to show everyone today, he was highlighting, is when the market is chopping, you can learn from what the EMAs are telling you, but you should just be able to, you need to be able to break this down to decipher what's going on. And not to say like, oh, you need to predict what's going on in the choppiness, but you need to have some type of idea and you need to have some game plan on how you're going to react. So that's why we focus a lot on waiting for the shift a lot, because that's gonna tell you so much. And yeah, that's about it. Just be patient and like wait for what you need to react to, because I know a lot of us just want to just say screw it, like it's probably gonna do this anyway, let's just enter. And over time it will bite you, it will make you have bad habits. So just wait for what you need to react to. Wait for your confirms, guys. That's
exactly. Yeah. So David, you got an email. Please confirm with the chat so you see that we are not just saying different things with what we do. I'm just adding you. So just you got an email right now and you got access to Golden Eyes. Congratulations. If you had any question middle of course, let me know. All right, guys. Thank you for being here and we'll see you later.
it. Peace.
Peace.